The most powerful market in finance is not stocks.
It is the United States Treasury market.
The most powerful market in finance is not stocks.
It is the United States Treasury market. When investors buy them, they lend money to America.
Treasuries are debt issued by the United States government.
When investors buy them, they lend money to America.
In return, the government promises interest payments.
These securities come in different maturities.
Bills, notes, and bonds dominate this market.
Treasury bills represent short-term government borrowing.
Treasury notes extend several years into the future.
Treasury bonds stretch for decades.
Together, they create the largest bond market on Earth.
Its value reaches tens of trillions of dollars.
Banks around the world depend on treasury markets.
These bonds are often considered the safest assets.
Investors trust the credit of the United States.
That trust anchors the modern financial system.
During financial crises, investors rush into treasuries. Investors trust the credit of the United States.
Demand increases as investors seek stability.
As prices rise, Treasury yields begin to fall.
These yield changes ripple through the global economy.
Treasury yields influence interest rates across the economy.
Mortgage rates often follow movements in Treasury yields.
Corporate borrowing costs depend on them as well.
Even government borrowing reflects treasury yields.
In finance, treasuries define the cost of money.
Treasuries are not just investments.
They also serve as financial collateral.
Banks use treasuries to secure short-term funding.
This process powers daily market liquidity.
Without this system, markets would struggle to operate.
The Federal Reserve closely monitors this market.
Treasuries play a central role in monetary policy.
When the Fed buys treasuries, liquidity enters the system.
When the Fed sells them, liquidity can tighten.
A small change can move billions of dollars.
Global investors watch Treasury yields closely.
A small change can move billions of dollars.
International capital flows respond quickly.
Treasury yields influence currencies worldwide.
This market connects the global financial system.
Liquidity is essential in the Treasury market.
Investors must be able to trade quickly.
Deep liquidity keeps markets stable. Without liquidity, prices can move violently.
That is why this market must remain stable.
But even this powerful market faces risks.
A disruption here can shake the global system.
Liquidity stress can spread rapidly across markets.
That is why regulators watch this market closely.
Stability here protects the global financial system.
We have to get the stabilization plan approved before the markets open.
I know, the projections look grim otherwise.
Every auction raises capital for public spending. Investors across the world participate in these auctions.
This divot helps finance the American economy.
But its influence reaches far beyond government finance.
Major financial institutions rely on this market daily.
Banks, hedge funds, and central banks participate.
The market connects institutions around the world.
Treasury yields guide investment decisions everywhere.
Few markets influence global capital like this one.
The Treasury market anchors modern finance.
It defines the benchmark for risk and return.
Investors measure value against Treasury yields.
Bond yields spiking across the board.
Get me a price on the 10s now.
Massive volume in Frankfurt. It's synchronized. Few markets hold such global influence.
Treasuries quietly support the structure of modern finance.
From banks to central banks, everyone depends on them.
Sell everything right now. The yields are spiking again. It's moving too fast. We need to hedge the euro exposure immediately. Get me out of the long bonds.
Because this market defines the global price of money.
To understand treasuries is to understand global finance.